Alright, this is Sean. I got some time here, so I will just briefly go over in some detail the Apple trade. Uh, as everyone knows, Apple's had a pretty good run here the last couple weeks, kind of culminating in the move over the last 2 days. So, just want to go over my thought processes to the whole Apple trade. Let's go back to earnings. This is the daily chart, and bring it in here. So Apple in response to its earnings definitely had a little bullish gap here. What I noticed technically is kind of broke this little pennant, if you will. It did initially beforehand sort of flush below. That was when the market really had some issues. I actually got short here on this day, very short term. Got out of it because that was when the market was sort of at its sort of panic selling mode. And to be honest, when I saw Apple come back, it seemed like a pretty good flush out trade in Apple. And especially after earnings, I definitely had that bullish reaction to earnings. I figured everybody in here, a lot of longs got out of Apple, a lot of people got short Apple, so I think there was definitely some pent up, demand for those who sold to get back in, and those who were short, potentially getting squeezed. So the strategy was very simple. It was just buying above the high of this bullish earnings report, and then the risk was the low of that day, which was 101, roughly 101, and the high is like 103. And next day they took that out. Didn't really act so great because it actually, and here's the thing: there was definitely some resistance here at this around 103 3/4, 104. That's the all-time high. So of course, buying it at 103, you have to understand that there's going to be some potential resistance, at least until it clears that 104. So, I mean, you could have looked at it. You could have done it two ways. Say, hey, you know what? I'm going to buy above, some level above that, and or level this level above it. But again, Apple did take out that high and then pushed in pretty good. But the initial risk is down in here. Or even on the the previous day's close, you're good. And then the next day, kind of gapped higher, and then it kind of really never looked back from that point on. Not the big momentum trade intraday, if you will, but if you had the patience, and again, this is one of those situations where it's just kind of buy it and put that stop in and come back in 2 weeks, trade, and if you stopped out, you stopped out, and if you're not stopped out, more than likely it should be significantly higher. And Apple definitely definitely benefited from the wind at its back with the market, but I mean, I think it had a lot to do with this this type of pattern, the bullish fundamental situation, and everything was, all the stars were kind of aligned. Reached 110 level, and then kind of had a few days of rest. Actually, I sold. Let's go to the video. I don't know if I have that one. So I did have an intraday monitor, so I had some on a daily time frame that I was risking against here and just let it go, and then I had some that was also on an intraday algorithm that just was also monitoring the trade. Kind of let it go and actually sold on this day at roughly when it broke 108.70. Sold that, sold the intraday portion. But then watched it kind of, the low that it got was, I think it's held above 107. Yeah, it held well above 107, and really, there was a little bit of market weakness. Didn't just held in really well. And again, this is sort of like a coiling situation. Then and this is the intraday version of Apple in that same time period. Here's where it went to 110. Kind of, I got out here when it broke this level here on the intraday. Kind of bounced around, and then I said, hey, let me get back involved. I think, I drew this little trend line. I'm like, let me take a shot at it here. It's kind of holding up pretty well. Kind of made a higher low here. Looks like it may want to get back involved, which I did. It had a nice little run to this resistance, but then came right back and actually peaked at it twice. And again, these are different days. So, and even pyramided into here, but then sold. Sold that pyramiding position at the end of this day as the markets kind of got weak, and then sold again. Sold the whole position on the 11th as it broke through, this support area in here. But just something I program in. It allows to re-enter the trade, especially if it just it's one of those, hey, I'm getting you out, and then it kind of bounces back. It'll actually re-enter the trade, which it did here on the again the same day that it basically sold this position. It sold here at 108.64, bought it back at 108.80. So I'm happy to buy it back if it's going higher. And then pyramided as one above 109, closed very strong that day, 109.35. Actually, not in this, but I bought a little extra above 109.35, just manually, because I knew that was a pretty big level here. Basically, you got 1, 2, 3, and breaking that resistance was pretty powerful. I think it closed at 109.70-ish that day. Then, if you remember, we gapped lower. We had a market was under pressure the next day, and but Apple was like the honey badger. That was really the impetus for hey, you know what? Let me buy this cheaper. Actually, manually bought some when it cleared 109.5, and then bought a bunch more. I had some different strategies. Here's one I set up on Apple again as it cleared 110. So yeah, so I have multiple strategies now on this one on Apple. This was when it cleared 110. And in this strategy, it had a Fibonacci target of 113.43, if I remember correctly. And had a good move yesterday, kept going, and again had a great move today. And then it's funny that the Fibonacci, it actually reached 113.45, and this thing had 113.43 as the target. But it doesn't necessarily just exit at the target price. It waits for a reversal bar with volume, which we had right here. This red bar was a reversal bar with volume, and it sells below that. So it sold below 113. Not the entire position. It sold about 75% of the position, or I should say 2/3 of the position. It sold on below that 113, and you know what? It pulled into 112, not even 112.5, and then now it's right back above 113. So it still has this still has a third of the position. I still have my daily position, and then in these strategies that actually bought it at 110, they have a Fibonacci target, I think closer to 114. So that the rules that got sold here only happened when the market clears that Fibonacci target. So in this case, it still has the full position because it didn't quite make the 113. I think it's 113.75 or something to that effect in this version of it. And then I have another strategy. Even here it is. A little bit shorter term. This was a shorter term strategy. This is actually this is the shorter term strategy I had. So again, I kind of diversify in multiple time frames. And this one I want to imagine is going to have a if we break these 112.5s, it will more than likely get out in this shorter term uh, version. So anyway, I just figured I'd do a quick video on how I will trade something like this, and you know, everything again is risk reward. So this wasn't a bad risk reward trade. But again, especially if these, yesterday's move above 110 didn't work out, I want to say the initial risk was at worst the low of the day, which is 109.37. So and we'll see how the rest of this trade works out. Again, it's tough not to get emotional about it, especially if you have a nice winner. It gets a little nerve-wracking, but that's the nice thing about having an algorithm to sort of manage a trade for you intraday, to not, not get too over-emotional. In fact, I also had options. I should say I bought options yesterday. 106 calls as it broke 110 as well, and sold half of them as it was on the way up, actually, because I was like, holy shit, this I got to take some money off the table. Sold them 113.15 I was trading. Then I actually sold the rest of the calls as they traded through 112.70 or so in here. There was a pretty vicious reversal in the market. It was like, oh shit, so that was my emotional trade of the day. Was the options, but we'll see how this works out. And it is what it is. I'm not a sell the high kind of guy. It's not good enough to do that. So it's about managing the position. So anyway, that's a little.